So you can open the first question. Then I think there are those who happen to have missed the previous class. So we forgot to record. But now what I told you can be able to do, you can check last semester's videos. So there's a similar video to that effect. You can be able to use that one for what we learned yesterday. So we tackled the very, very same question. So what you need to do, go to last semester's videos for public sector accounting. You'll be able to see the same question was actually tackled. The one we tackled was the same one we ended up having to tackle last semester. So you can be able to catch up there. So I don't know if you've been able to get the question. So it says, the first one, there are two of them. So there's the first one. There's the first one which says, the following summary of receipts and payments was extracted from the records of the Ministry of Finance for the fiscal year ended 30th of June, 2013. So that question is actually adapted from, it is adapted from May 2014. It is question number 5C. So May 2014, question number 5C. So confirm whether you've gotten the question so that we can begin. Confirm whether you've gotten the question so that we can begin. Yeah, so the question says the following summary of receipts and payments was extracted from the records of the Ministry of Finance for the fiscal year ended 30th of June, 2013. So we have some receipts and some payments that were made by this particular ministry. So of course, now in this case, we have the actual budget, the original budget, and of course, now in this case, the final, the actual, you have in this case, the actual, what was actually spent. Then you have the original budget, then in this case, you have the final budget that they had as a ministry. The final budget they had as what? As a ministry. So should be been given taxation, borrowing, trading activities, aid from internal agencies, disposal of assets, and other receipts. Then you've been given the payments there. So required the statement of comparison of budget and actual amount for the fiscal year ended 30th of June, 2013. So in accordance with 𝐸𝐵𝑆 number 24, in accordance with 𝐸𝐵𝑆 number 24. So we can in this case come up with a statement of comparison of the budgeted and in this case the actual amount that was actually spent. So the budgeted and of course what the actual amount that was actually in this case spent, the actual amount that was actually spent by this particular ministry. So comparison of the budget and of course the actual amount, comparison of the budget and the actual amount. So we have in this case the Ministry of Finance. So Ministry of Finance, Ministry of Finance. So Ministry of Finance, statement of comparison. Statement of comparison. Statement of comparison. Statement of comparison of the budget. Of the budget and the actuals. And the actuals for the year ended. For the year ended 30th of June, 2013. So you just come up in this case with a comparison. So what was actually budgeted and what was actually in this case actually spent. So whenever in this case you are given the original budget and of course in this case the final budget. So the figures you'll likely end up having to use here will likely be the figures for the final budget. You'll compare the final budget and the actual amount. So you can in this case have the details you can have in this case, the details here. Then you have in this case the figures for the final budget. Figures for the final budget. The figures for the final budget. Then in this case, you have the actual amount that was actually. Then you can have in this case the variance. The variance. You can have the variance. So in this case, we'll start with the receipts. We'll start with the receipts. So our amount here are actually in billions of shillings. Our amount are actually in billions of shillings. Our amount here are actually in billions of shillings. Billions of shillings. Our amounts are in billions of shillings. Our amounts are in billions of shillings. So we have in this case the receipts. So we can start in this case with taxation. Taxation. So taxation in this case, in terms of the final budget, it was an amount of 1120. Then of course, in this case, the actual amount that was actually spent was actually 800. Then in this case, you have borrowing. They also borrowed to get some money. They borrowed in this case an amount of 480. What was that? What was budgeted to be borrowed? In this case, borrowed 400 only. They borrowed 400 only. Then in this case, you have the trading activities. We have the trading activities. So from trading activities by this ministry, they were budgeting, they likely end up having to get in this case 840 billion, but they only got 800 billion. Aid from internal agencies, internal agencies. So in this case, that is they were expecting in this case to get an aid of 360, but they only in this case got 400. So they got only in this case they got 400. Then in this case we have disposal of an asset. So they were anticipating from the disposal of the assets, they likely end up having to get 760 billion, but they actually got in this case 800 billion. They got 800 billion. Then you have in this case the very final item, under receipts. It is other receipts. We have in this case other receipts. So we have in this case other receipts. We have other receipts. We have other receipts of in this case under the final budget. In this case, you have 208 billion, but in this case they got 200 billion. So they got 200 billion. So you'll actually end up having, in this case, compare what was the variation from the budgeted. What was the variance from the budgeted? What was the variation from the budgeted? So for example, in this case, if you look at the taxation, amounts regarding taxation, they were anticipating they likely end up having to get 1120. But they got in this case what? 800. So it means there's a difference of how much? If you take 1120 minus 800, you get 320. So these variations can actually be adverse, or they can actually end up having to be favorable to the ministry. So for example, this says if they were anticipating to get 1120 and they got 800, is this one favorable or adverse to the ministry? It is adverse. It is not favorable to them. So they were anticipating they'll be able to get from taxation more money, but they got less. So it is to their negative. It is to their disadvantage, because if they were anticipating to spend this money, it's just like in this case, you're anticipating to get a salary of 80,000 at the end of the month. Then surprisingly, your employer actually tells you in this case, you'll not get 80,000 this month. You'll get in this case, how much? 70,000. So you know you'd already budgeted for this, what? 80,000. So you'll have a deficit of, in this case, how much? 10,000. So it won't actually be in your favor because you already budgeted for it. Once it gets into the account, you start paying the bills, you pay the bills, you send to the circle, you send to your savings, you send to someone else somewhere, so maybe your parents or something. So it will basically be to your detriment. So this one was not in the favor of the ministry. So the same case, from borrowings, they were basically expecting to get 480, but they got less. So there's a difference of 80. This one is not favorable to them. The trading activities, they are expecting they'll get 840, but they got in this case 800. There's a difference of 40. This one is not favorable to them. It is adverse. It is adverse to them. Then in this case, aid from internal agencies. They were anticipating they get 360, but they got 400. There's a difference of what, 40. That is favorable to them. Exactly favorable to them. It's favorable to them because they got more. They got more, so it will be positive. Disposal of an asset, they were anticipating they got 760, but they got 800. They got 40 extra. That was in their favor. Then in this case, other receipts, they were anticipating they get 280, but they got 200. There's a difference of 80. This one is not in their favor. It's not in their favor. It is actually not in their favor. It is not in their favor. It is not in their favor. And therefore, in this case, with regard to total of the receipts, so there's in this case an anticipated. So the totals here, if you total here, what do you get? If you total those ones, what do you get? What do you get there when you total the totals? So 320 minus 80 minus 40 plus 40 plus 40 minus 80. What do you get there? So in terms of receipts, we have a variance of how much? Total, negative 440. So in terms of receipts, so there's a negative of 440. So it means in terms of receipts, it won't actually be favorable to them. It will be adverse. They won't be able to raise the total anticipated income. The total anticipated income, if you compare in this case actually what they got and what in this case they were having as a budget, there was a variation of in this case negative 440. So down here you put an equal sign, then you say negative 440 down here. You put the total, you say total here, then you put here negative 440. So that is basically in regard to what? To the receipts. In regard to the receipts. So we can now in this case look at the payments. We can now in this case look at the payments. So the payments now, the payments. You can look at the payments. So you just continue the same table. So don't draw another table. Continue the same table. Don't draw another table. So in this case now we are going to payments. So we are going to payments. So with regard to payments, so the first payment in this case is actually defense. Is it defense? So for defense, they were anticipating a final budget of 720 to spend 720, but they ended up having to spend 800. They spent 800. So for education, they were anticipating a final budget of having to spend how much in this case? 1,200. So 1,200. What they actually spent was the same amount of money. For in this case, health, they were anticipating in this case, they likely end up having to spend 400 as the final budget. They actually also spent in this case 400. For housing, the Ministry of Housing, they were anticipating they likely end up having to spend 360, but they actually spent in this case 320. For others, the other ministries. So for the other ministries, they were in this case anticipating to spend 760. They ended up having to spend 800. So like in this case, for the first item, their defense, they budgeted to spend 720, but they spent 800. There's a difference of 80. So was this one favorable or adverse to them? Was it in their favor or it was adverse to them? It was adverse because they were anticipating to spend less, but they spent more. They actually spent more. Just the same like in the same case, like in this case, your landlord, you normally pay a rent of 25,000. Then surprisingly, at the end of the month, he tells you won't pay 25,000, you'll pay 30,000. So you had not budgeted for it. So it will not be in your favor. You'll suffer. You'll suffer the 5,000 extra. You will suffer a lot, the 5,000 extra. So you spent more than anticipated. That is not actually in your favor. And then in this case, it is what? It is adverse. It is adverse. So in this case, education, 1,200, so that is 0. The difference is 0. 400, the difference is 0. Then in this case, for housing, they were anticipating to, in this case, spend 360, they spent 320. This one will be in their favor because they eventually spent, they were able to save. They were able to save 40 billion. They were able to save 40 billion there. Then in this case, the last one, for other ministries, they were anticipating to spend, in this case, 760 on them, but they spent more by 40, which is not in their favor, which is not what? In their favor, which is not in their favor. So what is the total there under payments? Do also the total for the payments. I think you'll get negative 80. Negative 80 because this one cancels this one. So negative 80. You'll get negative 80. You'll get negative 80 there. You'll get negative 80. So when you get the totals there, the totals for, in this case, payments, the totals for the payments, you'll likely get negative 80. You'll get negative 80. You'll get negative 80 like that. So the totals here, totals, you likely end up having to get negative 80. You'll get negative 80. You'll get negative 80. But now in this case, we need to get the net. So the net cash flows. The net cash flows for the Ministry of Treasury. The net cash flows for the Ministry of Finance will likely in this case be negative 440. Negative 400, the one we got under the receipts there, the one we got in this case under the receipts, the one we ended up having to get under the receipts. So it will be negative 440. Then in this case, we also add these other negative. So we add these other negative, negative and negative of 8 further. So they basically in this case in total have net cash flows of, in this case, negative 520. Negative 520. They'll be in the negative by 520. They'll be in the negative by 520. They'll be in the negative in terms of net inflows and net outflows by negative 520. By negative 520. So that's what will happen there. So I can see Cheporge is saying defense final is less than actual. Defense final is less than actual. So yes, that's what you've said. So it will be adverse. It will be adverse. Remember, for the payments, they won't behave the same way with the receipts. They behave the opposite way. So this variance, it is in the opposite way. So don't assume that under receipts, what we were saying should apply here. They behave the opposite way. So they behave the opposite way. So because here you are budgeting to spend, it's the same what I'm just having to tell you. You pay your landlord 720 shillings. Then at the end of the month, surprisingly, he tells you to pay 800. Will you be happy? You won't be happy. So it will be adverse. It won't be in your favor. It will be adverse. So hope you've gotten the point. Hope you've gotten the point there. Hope you've actually ended up having to get what? The point there. You've actually gotten the point. So I can see, are we not supposed to less payments from receipts? So if you less, you're supposed to get negative 520. Supposed to be negative. The answer is negative 520. The answer is negative 520. The answer is negative 520. It is negative 5 because you'll be further be in the negative. You'll actually further be in the negative. You'll further actually be in the negative by 80. So you'll basically still continue to go in the negative. So likely be negative 520. 520. Negative 520. So that in this case will actually be the net cash flows for this particular Ministry of Finance, Ministry of Finance. So it will be negative 520 because you'll be further be going in the negative. You already have in this case negative 440. You already have in this case what? Negative 440. Negative 440. So you'll further be going in the negative. Let's say, for example, in this case, the positive basically starts from here. This is the 0. So this is the positive, this is the negative. So if you continue lessing, it will be negative 520. So you'll basically be in the negative by 520. By 520. 520. So that is in this case how you'll be able to come up with now in this case what the comparison between the budgeted and of course what the actual. The budgeted and of course what the actual. The budgeted and of course the actual. So once we look at that other one, it's just the same. It is just the same. So there's no major difference. There's actually no major difference. It is just the same. Just the same. So it is so it says from the following information which was obtained from the Ministry of Finance for the fiscal year ended 30th of June 2012. Then in this case, prepare a budget outturn for the Ministry of Finance for the year ended 30th of June 2012 in accordance with the requirements of 𝐕PSAS number 24. 𝐕PSAS number 24. 𝐕PSAS number 24. 𝐕PSAS number 24. So we can do that one. We can do that one. We can do that one also. We can do that one also. So we can do that one also. So we have in this case the budget. So we have in this case the budgeted. So this is for the Ministry of Finance. For the year ended, it is for the year ended. For the year ended. For the year ended 30th of June 2012. So the 30th of June 2012. 30th of June 2012. So you can have in this case the budgeted, and of course the actual. And in this case, you'll have the variance. So you have in this case what the receipts. You can start with the receipts. So the shillings are actually in millions. The shillings are actually in millions. Shillings are actually in millions. The shillings are actually in millions. So so we can have in this case revenue. We have the first one, the receipts. You have revenue from taxes. Revenue from taxes. So revenue from taxes. So the budgeted, they'll end up having to get 600,000 million. 600,000 million, but in this case, they ended up having to get 552,000. And in this case, we have borrowings. Borrowings from, in this case, what the local market, national borrowing from the local market. And in this case, you have foreign borrowing. They have foreign borrowing also. They were borrowing from foreign countries. So they were anticipating in this case from the national borrowing. This, for example, if they sell maybe bonds, government bonds, they'll get 400,000. But they ended up having to get 380,000. So for foreign, they were anticipating they'll be able to borrow from the domestic, from the foreign markets, 160 billion, but they actually ended up having to get 320 billion, 320 billion. Grants from IMF and World Bank. Grants from IMF and World Bank. So grants from IMF and World Bank. So they were anticipating they'll be able to get 80,000, but they only got in this case 100,000. Then you have in this case other government agencies. From other government agencies, for example, if they collect revenue, other government agencies, they had budgeted in the budget that they'll end up having to get 60 billion, but they ended up having to get in this case 64 billion. So for this one, you can see the difference is how much? 38. It is 38, 48 or 38, 48. It is 48. Is this one, is it favorable or adverse? This one, is it favorable or adverse? This one, is it favorable or adverse? Is it favorable or adverse? This one, is it favorable or adverse? It is adverse. It is adverse. It is adverse. It is adverse because it is not in their favor. You know, you are anticipating you'll get 600 billion. Unategemea utapewa mshahara ya 600. Employer anakusurprise, end of the month anakupea less na 48,000. Wewe ulikuwa ushabudgetia, utafurahia. So utakasirika, so it will be adverse. It won't be in your favor. It won't be. Let's for example, it was the opposite. Ulikuwa na anticipate employer atakupea 600. End of the month anakusurprise, anakupea 700. So utafurahia because it is more than by 100. Your actual what you got as a salary is more. So utafurahia sana. It will be in your favor. So it will be favorable. So but if it is adverse, we normally put it as a negative. So it is adverse. You normally put it as a negative. It is not in your favor. So borrowings, they were anticipating they'll get 400,000, but they got 380,000. So it was less by 20,000, which in this case is what? Is adverse. It is not in their favor. For foreign, they were anticipating they'll end up having to get 160, but surprisingly, so the foreign market actually ended up having to behave so well. Maybe they got the euro bond. So they got more by 160. It was in their favor. Because they even raised more than they anticipated. It was in their favor, so it was favorable. Grants, IMF and World Bank, they were expecting this two, IMF and World Bank would give them 80 billion, but they gave them 100. So they are surprised. They got more by 20, so it was in their favor. So other government agencies, they were anticipating they were able to get 60 billion, but they got more from these other government agencies, so by 4 billion. So by 4 billion, by 4 billion. By 4 billion. So that is basically what will happen there. So then in this case, we have the totals. So the total, what is the total? Total for the receipts. Totals, you can give the totals. What is the totals you get here? What is the totals there? What is the totals there? What is the total? And 116, you get in this case 116 billion. 116 billion. So 116 billion, 116 billion, 116 billion. $116 billion. $116 billion. So you can be able to see there. It is 100. The totals are 116 billion. So the question is from the question is derived from December 2013. Question number. It is derived from December 2013. Question number 5B. December 2013. Question number 5B. 5B. December 2013. Question number 5B. Question is derived from December 2013. Question number 5B. So those are basically now in this case what the receipts. So you can go now in this case to the payments. You can go to the payments. You can go to the payments. You can go to the payments. And go to the payments. So you just continue with the same table. So don't draw another table. Just continue with the same table, the same table. Just continue with the same table. Just continue with the same table. The same table, but not now in this case. This is what the budgeted, the actual, and of course now the variance. So we can go to the payments. The payments. So on the payment side, we have on the payment side, we have they paid the Ministry of Education. The Ministry of Education, they were anticipating Ministry of Education. They were anticipating they'll end up having to spend 600 billion. But in this case, spend 536 billion. 536 billion. Then the Ministry of Defense, they were anticipating they'll end up having to spend 120 billion. But they actually, in this case, spent 80 billion. They spent 80 billion. The Ministry of Planning, they have said it's planning cost. It's not our ministry, but there's some planning cost there. So they were expecting they spent 10 billion, but they spent 15 billion. Then the Ministry of Health, they were anticipating they likely end up having to spend 201 billion, but they actually in this case spent 120 billion. Then the housing, so we have in this case housing ministry. So they were anticipating they'll spend 180 billion, but they actually spent in this case 220 billion. They spent 220 billion. Then we have in this case internal security. So they were anticipating they likely end up having to spend 240 billion. But they actually spent in this case 300 billion. They actually spent 300 billion. Then in this case, we have the other ministries. The other ministries, they are anticipating they'll spend 160 billion. But they actually end up having to spend 240 billion. They spent 240 billion. They spent 240 billion. So they spent 240 billion. So you can actually be getting the variances there. We can get the variances there. So this is the budgeted, and of course this is the actual. So we can do the comparison so that you can be able to see what are the variances. I can be able to see already, someone has already gotten the final figure, which is 0. Actually, it is 0. So in this case, we compare 600 and 536. The difference is how much? 64. So in this case, the variance is actually 64. This one is adverse or favorable. This one is adverse or favorable. This one is adverse or favorable. This This one is adverse or favorable. It is favorable. So because in this case, they were anticipating to spend more, but they spent less. This one is a difference of 40. Difference of 40. So this one is still favorable. They were anticipating they spent 120, but they spent 80, which was less. This is the planning cost. They were anticipating they spent 10, but they spent 15. So there's a difference of 5 billion, which is more. This one is adverse. This one is adverse. Then in this case for health, it was 201, 120. So you have in this case 81. 81,000. That one is favorable. It is favorable, Cindy. So it is favorable because they budgeted for more, but they spent less. For housing, they were anticipating they'll spend 180, but they spent more by 40. That one is adverse. It is adverse or unfavorable. It is adverse. So for internal security, they were to spend 240, but they spent 300. It is 60,000, which is in this case what? Adverse for them. It is adverse for them because they spent more. They actually spent more by 60. For the other ministries, they budgeted, they spent 160, but they ended up having to spend how much? 240, 240, 240. So therefore, in this case, it comes to how much? So that is 80, which in this case is unfavorable. Is unfavorable. Is unfavorable. So if you add, you get 0. You get 0. The totals, the totals you get how much? 0. You're getting 0. You're getting 0. It is 0, yeah. It is 0. You're getting 0. You're getting 0. So it means in this case, the net cash flows in this case will likely be. So in the first when we got what 116, which was actually in this case what positive, positive. So the net cash flows, so will likely basically be in this case the 116. If you end up having to less the 0, we'll likely end up having to remain with the net cash flows of 116 billion. 116 billion like that. So that's basically how you'll be able to present the statement of comparison of the budgeted and of course what the actuals. The budgeted and of course what the actuals. The budgeted and of course the actuals. The budgeted and of course what the actuals. So there'll be net cash flows of 116 billion. It's like in this case, they end up having to remain with the extra monies. Extra monies overally, if they look at how they have been able to raise and what in this case, how they have actually been able to spend in the different ministries, So that's why in this case, you come up with a budgeted statement of comparison, So that idea in this case actually marks the end of this particular area here. What is remaining is the theory part, which in this case we'll be able to tackle once we are through with branch accounting. So for now, I want us to switch gears and look at the very, very final area in terms of computation, which we refer to as branch accounting. So the very, very final area in the syllabus coverage on computations, I want us to look at branch accounting. Branch accounting. Although it is rarely tested, but almost 100% guaranteed it won't be in the exam, but it is part of the syllabus. So we'll just cover it. Almost 100% guaranteed it won't be in the exam. So they don't test it. I don't know why, but it is in the syllabus. So we just end up having to cover it. We just cover it for the purpose of the syllabus completion. But rarely, in fact, the other lecturers, they rarely teach it. They won't actually end up having to teach it because they already know. Probably in this case, it won't be in the exam. But it is in the syllabus. If you check the syllabus, it is there. Branch accounting. So you can write branch accounting. So branch accounting, so like that, branch accounting, like that. So we're going to take a break of 5 minutes, then I think we can proceed. Yes, so I think now we can proceed. So I think we can proceed. So Irene, can we proceed? Irene Onyango. Irene Onyango. Irene Onyango, can we proceed? Can we proceed? Can we go on? Yeah, I can see people are saying there, yes. So when you talk about branch accounting, before we write something, so let me just first of all try to introduce it. Branch accounting will likely arise in a situation whereby we have a company or maybe an organization that has what we refer to as what branches. It has branches, it has branches, it has branches. And in most of the instances, you'll find that in this case, companies that will likely end up having to have branches will have what? A head office. They'll have a head office. And of course, now in this case, there'll be a number of branches for this company. Let's say, for example, in this case, it is Quickmart. So Quickmart as a supermarket can have like a head office. Quickmart, they can have like in this case, what a head office. Then they have different branches in different locations. So I think right now they have how many outlets? 61. They have, I think, 61 outlets. So there are 61 branches. 61 branches. So what it means in this case, accounts have to be maintained for each and every branch. So each and every branch has to maintain its accounts. But in this case also, we have those accounts that have to be done at the head office. So they'll be specifically in this case, those accounts relating to the head office, which will be one of the branches actually. It will be one of the branches actually. But in this case, you have now the other branches in different locations across the country, There'll be different branches across what the country. So for those, each and every branch, they'll have like a branch manager. So they'll also in this case be maintaining their own accounts there. So they'll likely be maintaining their own accounts there. So indicating how much have they made as sales. Let's say, for example, in this case, it is what? It is 𝐤𝐤𝐢𝐴 branch, 𝐤𝐤𝐢𝐴 branch. So 𝐤𝐤𝐢𝐴 branch for Quickmart, these are the total sales they have actually been able to make over a particular period of time. This was, for example, in this case, what maybe their expenditure in terms of payment of salaries. But of course, there'll be a number of transactions having to happen in this Quickmart. For example, you might find that sometimes they might transfer goods from 𝐤𝐤𝐢𝐴 branch to maybe in this case, what? Nairobi CBD Tom Mboya branch. So there were some items which probably in this case they were not moving here. They ended up having to transfer. The same case, this branch can transfer here. The same case, the head office can be supplying goods to the branches. Some of the goods might be returned to the head office. Some of the goods might be returned to the head office. So there will be a number of transactions having to occur now between the branches, and of course the branch themselves individually or independently, they likely end up having to do what in this case, maybe carry on their own transactions, So these branches can either be dependent or independent. They can be dependent or they can be independent branches. Independent, you just know what it means. So you are independent. You don't want to rely on anyone. So in this case, probably these ones, they don't actually end up having to rely on the head office in terms of supplies. They do their own, for example, requisition of items or maybe goods, and they do their own accounting for those goods. But now in this case, dependent, they depend on the head office, maybe for supplies of some of the items. And of course, in this regard, it means that the preparation of the accounts here will also in this case be able to consider these what? Dependent. When they are preparing for the head office, they'll have to combine with those ones of what? Of the dependent branches, because they're having to depend on them. So there'll be a number of, in this case, key transactions or accounts that will end up having to be maintained, which you are going to look at regarding how you undertake what? Branch accounting. But before that, we look at those types of accounts that will be maintained. You can just briefly be able to introduce the topic. You can say a branch is a segment. A branch is a segment. A branch is a segment or part of a business. Or part of a business. Or part of a business. Situated away from the entity's head office. A branch is a segment or part of a business situated away from the entity's head office. 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 Then you can write types of branches. Types of branches. You can write types of branches. Types of branches. So types of branches, you can write types of branches. Types of branches. So the first one in this case, you can write dependent branches. Dependent branches. Dependent branches. We have in this case dependent branches. Dependent branches. You write this about dependent branches. It is a small branch. It is a small branch whose main purpose is a small branch. It is a small branch whose main purpose is to sell goods supplied. It is a small branch whose main purpose is to sell goods supplied by the head office. It is a small branch whose main purpose it is to sell goods supplied by the head office, full stop, by the head office, full stop. They do not maintain their own accounting records. They do not maintain their own accounting records. They do not maintain their own accounting records, but they are maintained by the head office. They do not maintain their own accounting records, but they are maintained by the head office. They are maintained by the head office. They do not maintain their own accounting records, but they are maintained by the head office. They are dependent. They depend on the head office. They are dependent on the head office. Supplies and even the accounting records, they are not independent. They are actually prepared at the head office. They are prepared at the head office. Then in this case, number 2, independent branches. Number 2, independent branches. Independent branches. Independent branches. Independent branches. Independent branches. They are branches which operate as separate business. They are branches which operate as separate business. Separate business from the head office. They are branches which operate as separate business from the head office. Which operate as separate business from the head office, full stop. So if that is the case, you just continue and write and say, they maintain their own set of accounting records. 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 Only independent. So najua watu wako independent vile wanaringa. Watu wako independent vile wanaringa. So they are independent. So they are independent. So just imagine they are independent. They are independent. So full stop. They write and say. You write and say. You write and say. Continue write and say. Apart from goods supplied to them by the head office. Apart from goods supplied to them by the head office. They have authority to purchase their own goods. Apart from goods supplied from the head office, they have authority to purchase their own goods. So, how pia wanaweza spend vile wanataka, so wako na pesa. They are independent, so they can spend as they wish also. It's not a must that in this case, they wait for the goods to be supplied by the head office. They can still buy by themselves and sell. So, apart from goods supplied to them by the head office, they can purchase their own goods. They can purchase their own goods. They can purchase their own goods. Apart from goods supplied by the head office, they can purchase their own goods. They can purchase their own goods. So that is it. So In this case, we can have foreign branches. Foreign branches. We can have foreign branches. Foreign branches. So these ones are not near. They are very far. So in this case, you can be able to write this. These are branches located in a foreign country. These are branches located in a foreign country. These are branches located in a foreign country. Full stop. There are branches located in a foreign country. Full stop. They can maintain their own accounts, or they can maintain their own accounts, or they can be maintained by the head office. They can maintain their own accounts, or they can be maintained by the head office. They can be maintained by the head office. They can be maintained by the head office. Can be maintained by the head office. Those are the types of branches. So now in this case, I want us we look at the different types of accounts. There are very, very nice accounts that are actually prepared there also. Very, very nice accounts. Very, very nice accounts that are prepared there. So I want us we look at the ledger accounts, and of course what will be happening in these ledger accounts when they're having to be prepared. So you can write ledger accounts maintained. Ledger accounts maintained. Ledger accounts maintained where goods are sent, to where goods are sent to the branches. To the branches at selling price. Or we normally say this one is cost plus markup. Cost plus a markup. Cost plus a markup. So, you know, with these types of companies that have branches, in most of the instances, you'll find that in this case, they've actually been able to centralize the purchasing. In most of these companies, what happens, they normally do the centralization of the purchasing. Such that in this case, the goods will likely end up having to be purchased at the head office. So they centralize the procurement and everything. It is done at the head office. That is what normally happens. So for proper controls, they will actually basically centralize the purchasing. So that in this case, this particular purchasing will likely end up having to occur where? At the head office. Then they do the supplies to the branches like that. They supply to the branches. They'll have, like in this case, a warehouse at the head office. Then they do what supplies to the branches whenever the stocks are out. So through the accounting systems, they can actually end up, each branch can end up having to requisite the head office. Then the head office basically supplies the order. They supply the orders. Like in this case, in short, so what is happening is that it's like the branches are purchasing from the head office. So they purchase from them, then they actually sell. Purchase from them, then they actually sell. So they'll basically, in this case, supply the goods to the branches, probably in this case at a selling price or at a cost, plus some kind of, like in this case, what, a markup on that cost. A markup on that cost. Then the branches now do what? Sell the goods. They actually sell the goods to the customers. So that is in this case what will likely end up having to happen. So if that is what is happening, then there'll be some ledger accounts that in this case will likely be maintained. There's some ledger accounts that will likely end up having to be maintained in the head office accounts. There are some ledger accounts that will end up having to be maintained in the head office accounts. In this case, we'll have these ledger accounts include, number one, you can just list them. Number one, branch stock account. So branch stock account. branch stock account. Then number 2, there's another ledger account. In this case will be the goods sent to branch account. Goods sent to branch account. Goods sent to branch account. Number 3, we'll have another account that is known as what? Branch debtors account. The branch debtors account. The branch debtors account. Then number 4, we'll have in this case an account we call markup, stock adjustment or provision for unrealized profits account. So we have the markup, stock adjustment. We can call it stock adjustment, or we can call it in this case provision for unrealized profits account. Provision for unrealized profits account. Just the same. For example, this is be told the goods were sent to the branch at a markup of this. So you'll have to open this markup account. You'll have to open this markup account. Then in this case, you account for that what markup of profit on the goods sent to the branch. So then in this case, we have branch expenses account. Branch expenses account. We'll have the branch expenses account. Then we'll have in this case the branch. We can also in this case be able to maintain each and every branch income statement. Branch income statement. So they've basically prepared each and every income statement for each and every branch. So for all the 61 branches for QuickMart, they can actually come up with all the income statements for all these branches. So branch income statement. So it is number 6. Branch income statement. Branch income statement. So they'll come up with the branch income statement for each and every store, each and every branch. So to show that in this case, how are the branches performing? So they can even do what the comparison of performance of different branches. So because in this case, if they're having to supply goods to the branch, they'll actually basically maintain what? A branch stock account, the goods sent to the branch account. They'll have a branch debtors account, there'll be a markup, stock adjustments, branch expenses account, and of course, in this case, you have what? The branch income statement. So these are part of the key accounts that will likely end up having to be maintained, But in this case, we are having branch accounts having to be maintained at the head office, So with these transactions having to occur, for example, goods having to go to the branch, sometimes they can take the goods to the branch returns them, they were not sold, like that. So and again, what is actually supposed to happen? The goods are supposed to, if they want to supply to another branch, they're supposed to go first of all to the head office. Then from the head office, they take to another branch. But sometimes there can be local arrangements. So the goods are basically leaving this branch, they are taken to this other branch. So that's why in this case, this kind of accounts will have to be maintained. The branch stock account. So let's say, for example, in this case, QuickMart head office. You have QuickMart head office. Head office. They have 2 branches. One of them we've been able to say it is 𝐥𝐴. The other one in this case, it is what? It is CBD Tomboya. So ideally, if there are items that are not having to be sold here, maybe CBD branch might be wanting that they are supposed to go to the head office faster, then they are taken to this particular branch here. So to be able to account for these stocks in the branches correctly, then that's why they have this account here. So that they know that in this case, in these stocks of 𝐥𝐴, they might have removed some. So they'll credit 𝐥𝐴 stock accounts, they remove them. They basically take them, they are supposed to take them to the head office, then they come. We're just having to say them the local arrangements. So these local arrangements, in this case, they're the ones called upon for this account to be maintained. So whenever, for example, they have moved to the Tomboya branch, then the branch stock account for this particular branch has to be adjusted. The same case, the branch stock account for this particular branch has to be adjusted because it is increasing, this one is reducing. So they'll have a branch stock account for 𝐥𝐴, a branch stock account in this case for what? For maybe Tomboya, so like that. So just be able to, in this case, ensure the stocks are having to be well maintained. So sometimes they can send goods to the branch. So from you having to say the head office holds the goods. So they send them to this, they can send them to the branch. When they send them to the branch, it simply means in this case, they basically be increasing the stock here. So this account will likely be affected. So they'll be increasing the stock here, like that. And of course, in this case, they'll also be having this account, which they'll end up having to do at credit. So the goods sent to the branch account. So like that. So that's why in this case, these accounts have to be maintained to just be able to monitor on such kind of transactions when you're having to account what, in this case, the branch accounting or the branch accounts. So now in this case, I want us to look at the journal entries, key journal entries that will end up having to be passed whenever these accounts are having to be prepared. The key journal entries that will end up having to be prepared whenever these accounts are having to be prepared. The key journal entries that will be prepared whenever, in this case, these accounts are having to be passed, or basically passed or having to be prepared. So you can have the journal entries, journal entries for branch accounting. The journal entries for branch accounting. The journal entries for branch accounting. Journal entries for branch accounting. So the first transaction here, we're going to look at how you end up having to treat it. You can be able to write goods sent to branch. So if there's a transaction involving goods having been sent to the branch, goods sent to the branch. Goods sent to the branch. Goods sent to the branch. So if the goods are having to be sent to the branch, then these are the entries you'll likely end up having to pass. So debit branch stock account. So you will debit the branch stock account because the stock is increasing there at the branch. Branch stock account. You will debit the branch stock account. Then in this case, you'll credit the goods sent to the branch at cost. Credit goods sent to the branch. Credit goods sent to the branch at cost. At cost. Then, of course, if it is actually at cost, there'll be a markup so that in this case, you can get what was the selling price that the goods went to the branch. So in this case, then you credit also what? The markup account. Credit the markup account. Markup account. Markup account. So this basically will account for if the goods were having to be sent as a profit, it will account for this profit. So remember we said there'll be a markup account to be maintained. So that is what the markup account will be accounting for. So if the goods are having to be sent to the branch at a profit or at a cost plus markup, then the markup will likely come in. But the cost at cost, they basically go to the goods sent to the branch account. Goods sent to the branch account, credit goods sent to the branch account. The number two transaction could be if we have goods returned to head office by the branch. So now the opposite of this transaction is happening. Goods returned to the head office by the branch. Goods returned to the head office by the branch. So there are some goods returned to the head office by the branch. Goods returned to the head office. Returned to the head office by goods returned to the head office by the branch. So you debit goods sent to the branch. You debit goods sent to the branch. You debit goods sent to the branch. In this case, this one is actually at cost. It's just the reverse of this transaction. It's just the reverse of that transaction. So then you debit also the markup account. The markup account. You debit the markup account. In this case, this one will be at the profit at which you had sent these goods to the branch. Be at the profit. It will be the profit. Then you credit the branch stock account. Credit the branch stock account to credit the branch stock account. So like that. Then sometimes there can be sales that were made by the branch. So there can be sales that were made by the branch. There can be sales that were made by the branch. I don't know whether in this case you are who goes on to run. I go through there. I want to rub. 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 You see, Debbie says yes. Debbie says yes. Karen Paul, are you through? Karen Paul, are you through? So we can in this case now look at another transaction. So sales made by the branch. 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 So sales made by the branch, that is transaction number 3. Number 3, that is number 3. Sales made by the branch. If there are any sales that were actually made by the branch, you can debit cash. You can debit cash. Debit cash if they sold on cash. You can in this case debit cash or bank. Or if it was on credit, if the sales were having to be made on credit, you debit the debtors account. Debtors account, in this case, you credit the branch stock account because now the stocks were reducing. The branch stock account, the stock of the branch was reducing because they made the sale. So you can be able to debit that one. 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 Then the other transaction in this case could be returns of goods by the branch customer. Returns of goods. A customer in the branch returned goods. Returns of goods by a branch customer. By a branch customer. A branch customer actually returned the goods. They actually returned the goods. See, it happens to return the goods. It means the stock at the branch is increasing. So you debit branch stock account. You debit branch stock account because the stock at the branch is increasing. Branch stock account. You credit in this case what? Debtors account. You credit in this case what? Debtors account. You credit debtors account. Debtors account. You credit in this case debtors account because the debtors will actually be reducing there. So the customer returned. The customer returned. Then it returns of goods by a branch customer to head office. Sometimes the customer doesn't want to go to the branch. So your customer akona kimbelembele. So anapeleka head office. Badala angerudisha tu branch, sasa yeye amejipeleka kwa head office. Ini customer wengine sijui wanakuanga na nini. So wanajipeleka kwa head office ya nini sasa? Badala arudishe branch, huyu customer alirudisha head office hizo goods. So ako tu na kimbelembele yake tu. Yeye alirudisha kwa in this case what? The head office. So here you're having to say return of goods by a branch customer. Is that exactly to the branch? But now in this case, sometimes these goods can actually end up having to be returned by the customer directly to the head office. So huyo customer akotuna kimbelembele yake, so alijipelekesha mwenyewe kwa head office. So returns of goods by a branch customer. Returns of goods by a branch customer. Returns of goods by a branch customer to the head office. 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 So what will happen here? So we'll actually in this case is that transaction that there's that entry we've actually been able to make hapo kwa the second one. You see what we have made in number 2. Just look at what we've done in number 2. Current Paul, angalia what we've done in number 2. We've debited what? Goods sent to the branch. So ni kama tu in short hiyo branch inarudisha kwa head office, but sasa ni customer ule wa kimbelembele. Alipitia the other side. So hakupitia kwa branch ndirudi kwa head office, but alipitia the other side. So what we've made in number 2 is what is occurring. Just indirectly it is happening like that. Your number 2, it is happening indirectly. It's just happening indirectly. So what will happen here, you will debit the goods sent to the branch. The goods sent to the branch. The goods sent to the branch account. Sent to branch account. Then in this case, that will be at cost. It will be at cost. Then we'll still debit the markup account. Debit the branch markup account. Branch markup account. Branch markup account. Markup account. This one will be the profit that was on these goods. They'll tell you there was a markup on the goods. But now in this case, the credit is what is different because it was a debtor. You are claiming from him, but he returned. So now in this case, credit the branch debtors account. Credit the branch debtors account. Branch debtors account, because it was a debtor. It was a debtor, but it's now returning. So he's reducing as a debtor. So the branch debtors account. In this case, debit what? The branch debtors account. Branch debtors account. Branch debtors account. So that's what will happen there. Then sometimes huko kwa branch kunaweza kuwa kuna mambo. Kunaweza kuwa kuna mambo huko kwa branch. Kunaweza kuwa kuna mambo huko kwa branch. Kunaweza kuwa kuna mambo huko kwa branch. So huko kwa branch kuna vitu zinaweza ibiwa. So goods stolen at the branch. Goods stolen at the branch. Goods stolen in the branch. Goods stolen in the branch. Goods stolen in the branch. Sometimes the goods can actually be stolen in the branch. So if the goods have actually been stolen in the branch, you know that is like an expense, an extra expense you've been carrying because you have to replace these goods. So you'll end up having to debit. You will debit the goods stolen account. Goods. This is like an expense. Goods stolen account, or you can call it loss account. Loss account at cost. At cost of the goods. The cost you incur to buy the goods, you'll end up having to incur it as an expense. Goods stolen account. Then you debit the branch markup accounts. Debit the branch markup accounts. Branch markup account. This will be the profit you would have realized on it. Then in this case, you credit the branch stock account. You credit the branch stock account because the stock at the branch is reducing. The branch stock account. The branch stock account. Hii tunasema branch stock account hii hapa. This branch stock account, we've actually mentioned it so many times. So we, for example, mentioned it in the first one, who sent to the branch. So they'll tell you, in the question, they'll tell you the invoice price. They'll tell you the invoice price. So this one is actually at the invoice price. Your branch stock account penye tumemention too, jua it is at the invoice price. So this zingine tunasema, kama your goods stolen tunasema it is at cost, then branch markup tunasema ni profit yake. So this one, they'll tell you the invoice price of the goods was this. Invoice price. The goods sent to the branch, the invoice price. So hiyo hapo unaweza kuweka invoice price. Hiyo ndio the language utatumia kwa swali. The invoice price. The invoice price of the goods sent to the branch was is the markup. The goods were marked up by a third or maybe a quarter. So that will end up having to help you get the branch markup. Then you'll be able to get now in this case the goods at what? At cost. So it is this branch stock account is having to be credited or debited at the invoice price. Is having to be debited or credited at what? At the invoice price. At the invoice price. At the invoice price. At the invoice price. So those are goods stolen in the branch. So we can continue. 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 So in this case, we can continue. That's number 7. So cash stolen. So cash sales stolen. Huko kwa branch. Hizo branches zinakuanga tu na mambo. So sometimes you are told maybe in this case the employees stole some of the inventory. They were putting in handbags. So there are a lot of things having to happen there. So that is the stress of branches. That is the stress of branches. The cashier went with the money. So cash sales stolen. This is now the cashier. Cash sales stolen from the safe. So cash sales stolen. The cashier was stealing. So such things can happen. So that is a loss you will incur. So you will debit, in this case, the cash stolen account. Cash stolen account as an expense. This is like an expense you would have incurred. Then in this case, you will credit the branch stock account. You credit the branch stock account. Then number 8, increase in price in the branch. Sometimes there can be an increase in price in the branch. Increase in price in the branch. They can increase their prices in the branch, increase in price in the branch, increase in price in the branch. So you debit the branch stock account, you will debit the branch stock account, you will debit the branch stock account, and in this case, you will credit the branch markup account. Branch markup account. So the profit was increasing. So you credit the branch markup account. Is like the inventory was increasing the value. The inventory was increasing the value. So you debit the branch stock account. Then the very last one, sometimes there can be a transfer of goods from one branch to another. So like what you're having to say, Joska branch to Nairobi CBD, Tom Mboya Street branch for Quickmart. So what will be the entries? What will be the entries in such a case? What will be the entries in such a case? What will be the entries in such a case? So transfer of goods from one branch to the other. Transfer of goods from one branch to another. 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 This one is increase in price in the branch. So hope you are seeing it. Increase in price in the branch, debit branch stock account, then you credit branch markup account. You credit branch markup account. So hope you've gotten it, Alex. Hope you've gotten that entry. Hope you've gotten that entry. Hope you've gotten that entry. Cash sales stolen. So for cash sales stolen, we had said debit cash stolen account, you credit branch stock account. You credit branch, so debit cash stolen account, you credit branch stock account, you credit branch stock account, branch stock account, credit branch stock account. Then for number 8, we're having to say increase in price in the branch. You debit branch stock account, you credit branch markup account. You create branch markup account. Why would we debit stock account? The price increases. Remember the entries regarding any effects on the goods, we are having to pass them through, in this case, the branch stock account or the branch markup account. The branch markup account. Remember, when we supply the goods to the branch, we supply them at what? At invoice price. That's what you're having to say that in this case. The examiner will tell you that in this case, the entries in the branch stock account will basically be at invoice price. So it means in this case, the value of the stock will likely be increasing at the branch. Whenever in this case, for example, in this case, at just what? The price. It's like the value of this stock will likely be increasing at the branch. So in this case, you supply them at maybe 10 shillings. But now, this is basically the price you're having to expect they'll end up having to sell it at. So maybe they increase the price, they are going to sell it at maybe 13 shillings. So the value of this stock at the branch increases. So the value of that particular item at the branch increases because they have adjusted their prices up. This is like the value of this stock at the branch ends up having to increase. You supply them at 10, you are anticipating they'll end up having to sell at 10, but now they're going to sell at 13. So the value of the stock at the branch is increasing. So hope you get the logic. Hope you get the logic. So you supply them at 10, that is the invoice price, but now they end up having to sell. They have increased the price, they sell at 13. Your value as a company at that branch has increased. So the branch stock is increasing the value. You debit. But now there's a markup. You are having to supply at a markup. So when you supplied at an invoice price of 10, maybe the markup was 2. You had marked them up by 2. So your cost as a head office was 8. Then you marked them up by 2. You send to the branch, then they sell. But now they have increased the price. So you can see the markup is from 2 to 5. So 2 shillings plus 3 is 5. So it is increasing the markup. It is increasing the markup. it is increasing the markup. So no, only the markup. So the increase in price, the increase is 3. So this one will be 3, this one will be 3. So you debit by 3, you credit by 3. You debit by 3, you credit by 3. So you debit by 3, you credit by 3 because your increase in price. Increase in price. Increase in price. So we can go to this one, transfer of goods from one branch to another. Transfer of goods from one branch to another. So in the books of the receiving branch, what will happen? Books of receiving branch. Remember, if you are transferring from Joska to Tom Mboya Street, so the books of the Tom Mboya Street, this is what will happen. So you basically debit the branch stock account, debit the branch stock account, because the stock of this particular branch is increasing. Debit the branch stock account at the invoice price. At the invoice price, then in this case you credit. You likely in this case credit the branch markup account. You credit in this case what the branch markup account, branch markup account, branch markup account should in this case what the profit. I think it will be the profit. The branch markup account, it will be the profit. Then in this case, in the books of the selling branch, in the books of the selling branch, you will debit the branch markup account. You will debit the branch markup account, debit the branch markup account. Then in this case, you credit the branch stock account, credit the branch stock account, credit the branch stock. The branch stock account, this one will be at the invoice price, will actually be at the invoice price. Will be at the invoice price. At the invoice price. At the invoice price. So those are the entries you'll likely end up having to make. Then there's one account you've actually been able to talk about, the goods sent to the branch account. So the goods sent to the branch account will have a balancing figure. That balancing figure will be the purchases, will likely be the purchases for that branch. You'll likely end up having to be the purchases for that branch. So in the branch, goods sent to the branch, there'll be a balancing figure. They likely in this case be what? Be a balancing figure. There'll be a balancing figure in the goods sent to the branch accounts. So there'll be a balancing figure in the goods sent to the branch account. There's an account we've been able to mention, debit, one of them, the goods sent to the branch account. So the one whenever this case we send goods to the branch, we'll be making entries into. That account will have a balancing figure. That balancing figure will now be the purchases, will likely now be the purchases figure, will likely be the purchases figure. And of course, when we'll be able to do an illustration, we'll be able to see that balancing figure will likely end up having to be the purchases, will likely end up having to be the purchases, will end up having to be the purchases figure, will likely be the purchases figure. Will be the purchases figure, will likely be the purchases figure. So you can be able to write NB, the balancing figure in the goods sent to the branch accounts, the balancing figure NB, the balancing figure in the goods sent to the branch accounts, the balancing figure in the goods sent to the branch accounts, the balancing figure in the goods sent to the branch accounts, the balancing figure in the goods sent to the branch accounts, the balancing figure in the goods sent to the branch accounts will be, the balancing figure in the goods sent to the branch accounts will be the purchases, will be the purchases, and it will be closed. It will be the purchases and it will be closed. It will be closed, it will be closed, and it will be closed to the purchases account, and it will be closed to the purchases account. It will be closed to the purchases. It will be closed to the purchases account. 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 So you're having to say the balancing figure in the goods sent to the branch accounts. The balancing figure in the goods sent to the branch accounts will be the purchases. The balancing figure in the goods sent to the branch accounts will be the purchases, and it will be closed to the purchases account. It will be closed. It will be closed to the purchases account. 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 So that is what will happen with the goods sent to the branch account. Then in this case, you can write another NB number 2. NB number 2. NB number 2, you can write and say. NB number 2, you can write and say. The balancing figure in the markup accounts, 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 the balancing figure in the markup accounts will be the gross profit realized. The balancing figure in the markup accounts will be the gross profit realized. The balancing figure in the markup accounts will be the gross profit realized. 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 The gross profit realized. So the balancing figure in the markup account will be the gross profit realized. 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 Those are the two most important figures. Those are the two most important figures. Those are the two most important figures. Those are the two most important figures that we end up having to get there. So, so there's a question which I'll end up having to leave. You can just be able to look at it. But now we'll be able to tackle it together. We'll be able to tackle it together. So you can just look at this particular question here in your past papers. September 2015, question number 3B. So we'll look at it on Thursday. So September 2015, question number 3B. So September 2015. Question number 3B. So I think we'll be able to look at it. Then I think maybe we'll try and actually look at another one. There's another one which I'll be able to send. It is not in the past paper, but I'm going to send. So I'm going to send. But there's another one that in this case is not in the past paper. I think we'll actually end up having to send. End up having to send so that we can be able to look at it. But I think we can end there for today. So we look at that particular question to be able to see how we can be able to account for branches. Can be able to account for branches. So we look at two questions. Then I think it will be okay. I think it will likely be okay with branch accounting. It'll be okay with branch accounting. So what will happen? So that is God willing on Thursday. Maybe we might end up having to finish. So what will happen on Friday? In Friday's class, I'll take you through the theory part. The theory part for the syllabus. The theory part for the syllabus. Then I think from next week, then I think we should be able to, anytime next week, we should actually be able to start a block revision. So we'll start block revision for that is just ideally preparation for the exam. So the theory part will be very important. Make sure you don't miss that session. The theory part will be very important. Make sure you don't miss that session, because in the exam, averagely, in most of the instances, 25 to 30 marks will be theory. Averagely 25 to 30 marks will likely be theory. In the exam, averagely 25 to 30 marks will be theory. So the remaining 70% is what will likely be computation. So you are also far much better off if you are prepared so well in theory. You'll be good to go. So you'll be good to go. If you are also so much, let's assume in this case you scoop even 20 out of 30 from theory. So then you go to this other one, published, you scoop another 15. Group accounts, you scoop another 20 out of 20. Just imagine. Be able to finish up with this thing. Just very quickly, you'll be able to pass. You'll be able to pass. So I think that is what will happen. So let's meet on Thursday. So we look at how you prepare the branch accounts. Then I think we can do the theory part. Then I think we can start the blocks. So for the blocks, we'll ideally just tackle past paper questions. But we'll majorly focus. So we can't miss out to go through group. We can't miss out to go through group. We can't miss out to go through published. And maybe another area. So we look at another area that probably highly it will be tested. High chance it will be tested. We'll be able to look at another area. So, but these ones we can't miss out to look at them during blocks. So group accounts and of course what published financial statements, published financial statements. So I think that is what is very important. So make sure in this case you are trying your level best to revise. Don't sleep a lot. So it's just 1 month to exam time. So you can stretch. You can stretch for this 1 month. Try your level best. So repeatedly go through the videos. So the more you go through them, try to attempt past paper questions. Even if they are not having to balance, you are far much better off than anyone who hasn't even tried to attempt one. So if you attempt and it doesn't balance, you are far much better off than that person who has not even tried to attempt even one. So you are far much better off. So make sure in this case you are repeatedly going through in this case what the concepts. The best thing I told you in this case, if you can be able to master the key entries, you'll be good to go. So you need to be able to master the key entries, how you come up with the key entries, because ideally they mark entries. For the computations, they mark entries. They just mark entries. So if you are very smart in terms of having to be able to compute the entries very fast and you plug them in the final statements, then you'll likely be good to go with financial reporting. So this one is not a matter of having to cram a formula like FM. So you can see this one happens to be the simplest you can be able to pass. So it's not a matter of having to cram a lot of formulas like FM. So this one is very easy. So ideally it is entries. You know, FM, if the formula is out, you are done and dusted. You are done. You are doomed. If you don't remember the formula, you are doomed. Basically, in this case, you mess in the first step, you are doomed. So here you can mess in a number of steps, but you made some few entries that are very correct. You get a mark. So ideally, which one is easy to pass? Financial reporting is easy to pass compared even to what? To financial management. That is very important. So I think we can end there. So let's catch up on Thursday and see how far we can be able to wind up with the syllabus. Thank you and have a good night.